Mr Chairman. I'm pleased to speak in the committee stages of this Insurance Prudential Supervision Bill. Without wishing to try your patience, Mr Chairman, I do want to take my few minutes in this call to describe the bill in terms of what it is not, because sometimes describing something in the negative is as beneficial as describing it in the positive. But we'll see how we go and how much I try your patience in the process. But, Mr Chairman, clearly Labor supports this bill. Our main concern was to ensure that it benefited policyholders, insurance policyholders, through ensuring the security and the transparency and the fairness of a supervision scheme. And, of course, we are in agreement with that. We also support the Minister's SOP. There's a 200-page bill here, Mr Chairman, and a 10-page supplementary order paper. And both of those things reflect what the bill could have been, but is not. We support the bill, we support the supplementary order paper. But the question arises from the supplementary order paper as to whether or not this bill seizes the opportunity that was before the government and before the Select Committee, but at the direction of the government, was in fact before the government. In doing something essential, which this bill does, and that's encouraging by its own purpose the maintenance of a sound and efficient insurance sector that can promote confidence amongst policyholders and the general public, it achieves what it sets out to do. However, these are extraordinary times. To improve the insurance sector and the transparency and security of that is a good thing in these extraordinary and uncertain times. But in fact, the government could have taken the opportunity to do something even more substantial. Here is a portion of our economic structures being given into the hands of the Reserve Bank in order for that monitoring and that supervisory function to be performed. And that is a good thing. But what the government could have done is to have taken another look at the functions of the Reserve Bank and to have expanded its functions in a way that addresses...
A point of order, Craig. I think I can anticipate. And I think without even hearing it, I'm going to uphold it. The member needs to clarify the argument that she's putting in relation to the bill before us. Marion Street.
Speaking to the point of order.
No, I've spoken and I've just said the member must talk about the bill. You can make a comparative example, but you must draw it into the bill.
Thank you, Mr Chairman. The treatment of the insurance sector, as I have already said, is a valid and important and justifiable thing to do. And why not accompany that with some additional measures that relate to comparable sectors in the financial structures that we have and deal with a comprehensive range of financial tools that is available to this government or could be available to the government with some imagination and some boldness. And yet what we have in this bill, Mr Chair, is a cringing timidity on the part of this government that restricts it from looking at the creation of other financial and economic institutions or powers within the Reserve Bank and limits it only to the purpose of this bill, which is in fact to encourage the maintenance of a sound and efficient insurance sector. We don't disagree with that, but it cannot go unnoticed in the context of describing what this bill does, that it could have done more.
Right. The question is that, are you seeking a call? No, you're not. Are you? Well, then I will put the question. And the question is that the amendments in the name of the Honourable Bill English as set out on SOP 155 be agreed to. Those of that opinion will say aye. Contrary, no. The amendments are agreed to. The question now is that parts 1 to 5, schedules 1 to 3 and clauses 1 and 2 as amended stand part. Those of that opinion will say aye. Contrary, no. The motion is agreed to. I will report this bill with amendment.